Good morning, everyone. Thanks for joining. This is Franz Smit from PilotInsure. So over the last 8 months, I've been working tirelessly, and it's almost all I've been doing, is to get this loss of license thing back for us and get us all back covered correctly and properly. And roughly 2 months ago, 3 months ago, I got it approved successfully by a couple of, or actually just one reinsurer coming into Africa, which means there is one insurer locally that is willing to back it. The insurer is called Liberty Life, and Liberty Life's got an amazing product. They've been around, as long as the trees and mountains have. And they were really some of the first guys to bring the loss of license insurance back in the SAL days, or SAA days, when they guys had cover there. So I'm going to run through this presentation. There's a bunch of people on the call. Thank you very much for joining. I'm going to run through the presentation, so we've got some bite-sized snippet that we can send out and everyone can watch at their own leisure. So let's get going. So intro, PilotInsure. So PilotInsure has been around for 12 years unofficially, but officially 10 years that we've actually been selling products and been in the market. PilotInsure is a very boutique and very specialized brokerage. We only work with pilots. We're standing on just over 2,000 in terms of client base. And obviously, with time, we've expanded that quite a bit into Aircrew, air hostesses, or shall I say cabin crew as a whole, and everything else surrounding aviation. Our clients are everything from airline pilots such as yourselves to guys bombing 1900s all over Africa, and really there isn't a continent or a place where South Africans fly that we don't have clients in. Myself, I'm very involved in aviation. My entire team, we're quite a big sponsor of the general aviation circuit, and you'll see us at all the air shows and fly-ins, and especially aviation competitive events with SAFAIR, myself being the vice chairman of that organization. Okay, just a brief intro. Why do pilots need specialized insurance? Well, I think you know as well as I do how fickle it can be for you to lose your medical. And the medical is really what bounds you to your job. And we all know the years and sweat and tears and money you put into your profession and being where you are in your career. If you had to lose that medical, there's no real way, and COVID has proven that to us, there's no real way to transfer that skill directly into something else where you could earn the same kind of income. Some of the other products, life insurance and dread disease covers that we offer, also unique to pilots. Again, aviation is extremely broad. Pilot's not just a pilot. There could be many different things that you do, many different machines that you fly. You could be flying over the weekends, you could be doing aerobatics, and that's just in the airline space, never mind the contract space. So there's really 3 different products. When we talk about loss of license, there are 3 different products that are spoken about. It's not only one product, and it's not just disability. The 3 different products is temporary income product, a permanent income product, and then a lump sum loss of license. The temporary income product in the industry, all of them has got a 3-month waiting period. So that means something happens 3 months later, you can put your claim in. 3 months later, you can put your claim in, and they'll pay for the first 2 years or 24 months. Permanent income kicks in after that from month 24 up until the age of 65. And then the lump sum product, that could be any amount you wish or you can afford or you want to insure. And that is paid out on permanence as a lump sum. Just as a note, all of these amounts are tax-free amounts. So what you see is what you get. In terms of percentages, and I think I mentioned it later on as well, but just to make sure I'm covering it, in terms of your temporary income and your permanent income, you can insure 100% of your net income. So that's after tax income. Thinking behind it is, and the premise behind all this insurance is to put you in the same position. We're not allowed to put you in a better financial position. Excuse me. Okay, so what are some differences and some upsides to what we're trying to do? So it's a real loss of license, both in the temporary and the permanent income, as well as a lump sum. Although part of the current group scheme in the example I made was doing comparison between what you have and what is mandatory, which is the temporary and permanent income. Something we really all need is a lump sum amount as well. That's really an individual thing, and that's what I'll be talking to you about when we speak to each other on a one-on-one basis. Something really special that we've managed to do is there's no medicals coming over, except obviously if there are pre-existing conditions, and each of those will be dealt with individually. I've already dealt with 4 cases as it is, and it looks really good. On average, so this is taking all the 200 odd pilots together. I've got a 50% saving on premiums. I've seen 10 to 15% savings, and I've also seen as much as 70% savings. So that really is very age dependent. Obviously, we can all get as much as us to do this as possible. We've got collective bargaining. So when I talk about the pre-existing conditions and age factor, maximum entry ages, that's all things that I can renegotiate if we can get to a stage where we've got critical mass. Critical mass, no one really knows what that is, but as a guesstimate, I'd say anywhere between 65 and 70%. Bearing in mind, this whole conversation started as being a group scheme where everyone comes over at the same time, and this has not changed, where your vote is really just, do you want the existing thing or do you want nothing? Which means I need to attack it from an individual basis. You own your own policy, and that's very special, so you can make and break and change any way you like at any stage. There's no limitations to what you can do with it and the values, where obviously, you know, the group scheme, you cannot make any changes. You're covered for flying abroad, so if you had to change job and go fly for a different airline, this cover would follow you. Which means you're really pegging it at this age rate, which just means it's going to be cheaper really going forward. And then obviously no surprise annual increases. So it's not possible for there to be a sudden 100% increase in benefit while we're reducing the cover or anything like that. It's all contractually fixed. So that cannot be changed from our side. It can obviously be changed from your side at any stage. So I've written out some perceived downsides, just things that I thought you guys really needed to know. That's important. It's something that was discussed quite at length with Mo Louise and the guys at SAFAIR, but I want to make sure you all know exactly what's going on. So our maximum entry ages as it stands now is 55. And all new insurance policies will have a 1-year mental health waiting period. So basically what that means is if there's a mental health condition that creeps up, it's covered, they are covering it, but they are putting a 1-year waiting period in place, which means from month 13, it starts paying. And the only reason that's happened is because there was a massive spike in claims, and particularly mental health claims during the COVID period. And unfortunately, a lot of those claims weren't approved by various of the other insurers. So this is really like an industry take. This isn't a liberty take at all. It wasn't approved because quite a number of them were deemed to be fictitious. So another thing that was really important was premium increases, and what does that look like? So again, because it's your own insurance, you can do with your premium increases what you like. There are really three options. One's a age-rated option, level, and a fixed. And with my example, I had to use the age-rated option because really there was nothing else I could reasonably use to compare to the existing product you had that could just have these massive increases that we witnessed. So if I was going to use a level or a fixed, I would completely skew the numbers. We wouldn't have anything accurate to work on. Okay, so here's just what those age-rated numbers or different options look like from level, age, and fixed. So there's some interesting things I want to just show you here. So you'll say that the age and the fixed is the same premium, and it continues being the same premium. This is because we are only using your income and in this example. But what I want to show you is the level premium. So you'll notice the level premium starts off quite a bit more expensive than the age rated in the beginning, and then you'll see the age rated with time catching up to your level premium. So on face value, it looks like there must be something big, some big differentiating factor, and it's because on the age rated, what happens is every year you get older, that existing insured value you have goes up by, looks like roughly 4%, and that's what they think your risk factor is higher for that year that you are older. But what's really important here is to see that it takes about 10 years for the premiums to catch up with each other. So if you select the age-rated premium, that's obviously less expensive to start with. Only in 10 years do you start paying the same amount of money on the age-rated premium as the level-rated premium. So if you go and calculate really all that saving you did in the previous 10 years, it could be quite a substantial amount. And I've got a little calculator for us on that. So really your option is going to be level and age rated, and it's going to be individualized things. So again, depending on your age and where you are in your career and how long you still have to work, we will have this discussion and we'll really see which one of these options make the most sense to you. But then a little example, Excel spreadsheet of the potential savings, and just with one or two examples that I've had so far. Let me pull this one up. I'm going to try and make this a little bit bigger. That doesn't work. Okay, so I hope you can see this. Yeah, there we go. And it should help a little bit. Okay, so this is an example of what some of these savings could mean if instead of paying this towards an insurance product, we actually invest in that money. And I can use various ages here. These are just 3 ages that I ran.
Franz, there's nothing showing on our screen.
You're not seeing this? Are you still seeing just the normal presentation?
Just a PowerPoint presentation, so we can't see the Excel spreadsheet.
Okay, thanks. Let me change that. There we go. Got it.
Cool, thanks.
Okay. So here's an example of what it would mean if we had to take the savings and invest it. And again, each person is going to be individualized. So I will share this Excel with you on the group. And this is just the monthly savings. And what does that actually mean at the end of the day if we are looking at retirement, which as a career pilot should be something you are focused on as well. So just an example of what we can do if we rather use that money into investing. So let's go back to that. There we go. Okay, where were we? Oh, yeah. Okay, so here's some of the questions I've received. What percentage of my salary can you insure? So it's 100% of your net. So that's after tax income. What age does the policy stop? So if all the loss of license product is age 65, for all the other products, the life insurance, trade, etc., it's whole of life products. So that just means as long as you pay it, it's in place. Can I earn other incomes from claims? So what happens with abatements on the income? So that's a very interesting one. So for someone like a businessman, you'd really want to be looking for a product that doesn't do that, so that if you still have income coming in from your business, that doesn't reduce the actual claim that you're seeking. So as an example, let's say you insured for 100,000 Rand a month and you still have a 20,000 Rand income coming from your business, then that 100,000 Rand a month insurance would only pay out a difference of 80,000 Rand. In your case, you know, what's the reality if you had to lose your medical and lose your license, that you'd still take another job? You know, especially if you have a proper loss of license and it starts paying out. And then, is this a loss of license or disability? That's also a question I received. So really, it's a disability product with a loss of license, a wrapper over it. So that just means that the first thing we look at is the loss of license. That's the first question we ask is, has this affected this person's ability to fly as a pilot? And the obvious question is, if you don't have a medical, you can't fly. So that makes the claims process much easier. Why it still has a disability component and has a disability and an impairment component is there could be smaller things. There could be something like you lose a finger, and that doesn't affect your ability to fly at all. And there could be a 25–50% claim on the lump sum disability product as well. So really, it's just covering all the bases. And then what other products you have? So the lump sum, which isn't part of the group discussion, life insurance, trade disease, and we're quite big on the investment space, purely because you know, aviators generally need to look after themselves. Okay, so that's really my presentation. I know there would be a couple more questions and things that I haven't covered. I am open to questions. You have my contact details. Please reach out to me at any time, and I'll be very, very happy to respond. Thanks for watching. Okay, let's stop